Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Yet another mixed day for the markets, with the Dow finishing in the green, but the Nasdaq losing ground again. That tech-heavy gauge has now given back nearly 1,000 points in under a week. We're going to dive into the rest of today's market trends. Then, while Microsoft canceled some data center contracts, most companies just keep spending more and more money on them. We're going to take a look at the current state of the data center market. Plus, first crypto dipped back under 100,000. Now it's dropped under 90,000. And we're trying to figure out and make sense of what's causing that sell-off. Well, there's been a lot of talk, of AI spending this earnings season, with data centers being a huge contributor to capital expenditure forecasts. Data center market has more than doubled since 2022 to over $27 billion last year, and by 2027, it's projected to surpass $41 billion. For more, we're bringing in Peter Davoren, Chairman and CEO of Turner Construction Company. Peter, it's great to see you on set.
Thank you, Josh. Appreciate it.
Data center, listen, we talk about this space a lot on this show because it's one where investors are obviously very interested and very excited. You have very unique line of sight there as a construction services company. So I'm curious what you're seeing, Pierre. What have you seen over the past 12 months? What are you projecting ahead?
Well, we started getting into the data center building market about 15 years ago, and there was quite a ramp up over the course of the decade, especially with the hyperscalers and now with the co-locators. And now what we're seeing is 30% of our backlog of over $32 billion is in the data center market, in the advanced technology market. And we believe that it's going to go up to about 40% in 26 and 27. So it's quite lucrative for us. The race for AI is still on, and we can't build them fast enough. What we need is land and power.
Well, you can't build them fast enough. So that's true here in the US. I'm also curious, as you look overseas, what are the trends you see, for example, in Europe?
It's the same. Europe and Asia, there's this race for land. There's probably easier way to get power in some of the other places outside of the United States. But the race for land and power in Europe and Asia is still extremely strong for the hyperscalers and the co-locators.
There are some folks, Peter, listen, investors have been very excited about the space, and you can understand why, for good reason. You do hear some question, though, are we overbuilding at that point? To those folks, you say what?
Well, we say that, as the technology changes, you got to remember, when data centers were first built, they were for storage. Now they're for computing. And now AI is going to help them compute even more. So more CPUs need to be stored inside these data centers, more power is required, more HVAC is required. And I think that as technology changes and becomes more advanced, there's going to be more space needed for these data centers all around the world.
You're helping build data center for Meta, right? I'm curious, in Louisiana. I'm curious, talk about that a little bit. What's the cost of that, Peter? What's the timeline to completion?
Well, right. It's public knowledge that the project itself is $10 billion, and it's broken up into different companies building it. But it's a very, very large project, and it's very, very exciting because it's going to be very complex. There's going to be a lot of innovation that goes into that project because the owner is very innovative, and they would like to see efficiencies like they've never seen before. So it's a pretty exciting project for us and for others down in Louisiana.
And why Louisiana?
I think that was a strategic place that they've been looking at for a long time. Obviously, power is available for them, and it's just a very, very good place to be. They're not normally in urban environments. They're normally in more rural environments.
I would imagine, Peter, you are competing in a pretty competitive market. When you think about your company, what are the competitive advantages you bring to the table?
Well, I think that there are 8 million construction workers that will show up for work every day, and there's 120,000 of them in our construction sites. And what we have to do is we have to provide an environment for every construction worker to be at their best, be authentic, and be treated with respect and dignity. Eliminate hate and bias, and every day, and treat people with respect and dignity by actively caring for them. We feel that this is a differentiator for us, so that their facilities on the project are as good as the facilities we have in our office.
You mentioned all those folks showing up to work every day, all these construction workers, Peter.
That's correct.
Obviously, Trump back in office, talking tough on immigration. There's been some questions raised about what that could mean for the construction industry. I'm curious how you think about it.
Well, we have to follow the rules. We have to follow the I-9 rules of employment, and we audit them all the time, and we make sure that everyone is legitimately working on our construction sites, and we're responsible and accountable for everybody that walks onto the site to make sure that they're legitimate.
What about, speaking of all things Trump, lots of hot talk about tariffs. I'm just curious, how are you all exposed to that, if at all?
We've experienced this before during 2016 and 2020, and since that period of time, and during the supply chain, we put 350 people in our company that just follow materials. So right now, if you say that any construction site, 45% of the cost of the project are materials, we make sure we vet that and make sure that most of those materials come from the United States. And we do that, and we've been doing that since the first administration. So to reduce the opportunity for a tariff to be there, we're doing that constantly.
Peter, great to see you and have you on set today. Thanks for joining us.
Okay, thank you very much.
U.S. stocks closing mixed as NVIDIA and Tesla lead the Nasdaq lower, and Yahoo Finance's very own Jared Blickery joining us now with the trading day takeaways. Jared.
Takeaway number one is we have a little bit of a tech rout on our hands, and we're going to explore some of the statistics here. Now, you'll note the Dow did close in the green today. I believe it closed in the green yesterday. So that's why this is not a general market spillover. We still have some pockets of strength, which we'll get to in a second, Josh. But the S&P, here's some stats for you. S&P 500, lowest close in a month. Same for the Nasdaq 100. Nasdaq Composite, 3,000 stocks. That was the lowest close since November 22nd. That's like 3 months away. ARC, that was the lowest close since November as well. Bitcoin touching the lowest since November. A lot of November lows here. And ARC, Russell 2000, that's what I wanted to get to. You got to go all the way back to September for that one. So it's been kind of rough here, and we're seeing it spill over into crude oil. Crude oil had a nasty day. 10-year yield, that's spilling lower. So there's this flight into bonds that we're looking at. And when people cram into, I shouldn't say the word cram, but when people fly into bonds, when they move into bonds, that's not always the most bullish thing. Same for staples. Consumer staples has been up. Healthcare is holding on. Those are arguably those are arguably defensive. But then we have Apple. Apple has been a kind of a strange case, and so that's been holding up as well. But I think the biggest thing I've been looking at here, I've been looking for historical analogs. This is the S&P 500 over the last 6 months. This structure right here, over the last few days, 4 days ago, we had a record high, very reminiscent of a few years ago in 2022. I'm going to have to put a 5-year chart. It's going to be hard to see, but if you were to look at a daily chart right there, it looks very similar to what's happening here. Not saying that it has to happen, but that's what we're up against, and that's what I'm watching for potentially.
And now, though, I got NVIDIA earnings on deck. So the CEO, Jensen Huang, can he come in, save the day?
I'll tell you what, it might still be all about NVIDIA, but I'm not sure. And what I'm looking at here is volatility. Volatility is thy name. We saw the VIX perk up today. It spiked above 20, and that's kind of a psychological level. You got to be careful about reading the tea leaves of the VIX because you can read a little bit too much into it. It's kind of easy to do. Here we go. Here's the VIX I was looking for. And let's just throw a 2-month chart in there so you can see some of these other spikes. We had a late January spike. That was kind of the same area. By the way, if you can't see it, here's the high of the day. Here's that January spike. Here's another January spike. And so these spikes tend to end up in the same area. And if we do roll over in the VIX tomorrow, that doesn't mean that the selling in stocks is over. That just means that the momentum, that big momentum that we hit to the downside today, that is lessening. So my eyes are on the VIX. It's at a 19.43, not too concerning, but I do want to watch that. The other thing I'm watching is the bond market VIX, and that is the ICE B of A Move Index. And while that has been heading a little bit higher, that's really nothing to worry about either. I do want to get back to the VIX here because we have a quote we have a clip here from Kevin Gordon. He's from Schwab. Just talked to him on Stocks in Translation, and he had some things to say about the volatility index and how it's a little bit different this year than last year. Let's take a listen.
in terms of the policy backdrop and all of these cross currents, whether it's on tariff policy, whether it's on immigration, we think that's going to be a much bigger and significant driver of index level volatility this year. And to some extent, you've already seen it at the, just in the short time we've had in 2025. But that's definitely a theme we see persisting this year. Not that it means it's a bad year for the equity market, but it's just going to look different than it was in the last year and a half.
I think this year already looks much different than last year, especially with the Mag 7 really just not pulling their weight. Again, all eyes on NVIDIA tomorrow, but who knows if they're going to be able to save the day.
Lastly, speaking of volatility,
crypto. So crypto fell out of bed today. That's a big one. Crypto craters, not just Bitcoin, although that's what we're going to look at first. A lot of the altcoins have been showing weakness lately, but Bitcoin has been trading in a range from about 90,000 to, let's say, 107,000, something in that range, and it finally broke 90,000 today. So that's kind of a big deal. And for all the bulls, all the Bitcoin bulls out there, I like to talk about the false breakdowns in Bitcoin. And so that could be another one that we're looking at here today. This could be a false breakdown, but we need to see a swift rise above 90,000, ideally above 92,000 in the next day, in the next 2 days, and then maybe a launch higher. So this is looking a little bit bearish for crypto. Let me just show you the 5-day total for all of the coins here, because Bitcoin is actually one of the best off here. We're looking at declines of 15% all the way to 8%. The list goes on. And then you look at the year to date, some of these things are down half. They've been cut in half. So crypto not looking the strongest right now.
All right, the good news, we're going to keep talking all things crypto coming right up in the next segment.
Well, that is good news.
Thank you, buddy. Stick around. More Ask for a Trend right on the other side. The Trump crypto rally seems to be faltering. Bitcoin seeing its biggest drop in 3 weeks as it briefly dipped below 87,000. But our next guest is looking at bright spots ahead for crypto. Movement Labs co-founder Cooper Scanlon joins us now to discuss. Cooper, it is good to see you. So Trump wins re-election, Cooper. The party starts, right? Dancing bears and rainbows. But now we seem to be fading here. I look at Bitcoin. It's hitting a 3-month low. What explains this, Cooper?
Yeah, it's great to be here, Josh. I'm calling in live from ETH Denver right now, the biggest crypto conference in America. So sentiment is still strong on the ground here, looking at this as a blip on a long-term horizon of technical innovation and excitement for what's to come in the US regulatory market. I think that what we're seeing market-wise is consumer confidence dropping nearly 7% from 105 points to 98 points in a single month, alongside inflation and the top performing stocks dipping. So the very foundation of the market is being rattled. And as a 24/7 online industry, crypto tends to feel uncertainty first and the hardest. So it's a very sobering moment to reflect on the foundations that you're building on and investing in.
So Cooper, you're kind of mentioning some kind of macro jitters and concerns. I'm also interested, what about that recent hack of the crypto exchange Bybit? Do you think that's playing any kind of role in this?
Absolutely. Our industry is still facing critical security challenges, both technical and social engineering wise. Turning the focus to Bitcoin, if we really laser in on it, we've seen nearly $1 billion leave Bitcoin ETFs in February alone, with about $1.6 billion worth of liquidations in the past 48 hours as well. So as you mentioned, post-election rally is cooling off right now, as the economic and regulatory realities become more apparent that these regulation changes aren't going to happen overnight. But I think that regardless of it, as I mentioned, we're still seeing very high sentiment and interest as we meet with institutions here in Denver and at the upcoming digital asset summits as well.
I am interested, I mentioned the Trump administration. Clearly, Trump, listen, he campaigned as a friend of this the industry. You look at his team, Cooper and J.D. Vance and Howard Lutnick, RFK Jr., they're all fans. I'm just curious, so far the moves he's made, and granted it's early days, right? He's only been in there for 5 weeks or so. But are you impressed with the moves the Trump administration has made? Are you underwhelmed? How do you feel about it?
I think that if we look at how things were, even last year, it's a much better regulatory environment today than it was before. There's a lot less fear and uncertainty, particularly for US founders. I think that the key thing that we in the crypto industry are excited for and looking forward to is this pathway for real regulatory paths for US founders to bring their companies onshore. I think that what we're going to see from this is a lot of legitimate businesses being able to align more with America. And for the folks who want to remain offshore, it's going to speak volumes to the retail and the consumers as well.
What about this idea, Cooper, of a national digital asset stockpile? Our new AI czar, David Sachs, he's now thinking that over. He's evaluating that. You think that happens? And if it did, what would that mean for Bitcoin?
Absolutely. I think it's exciting to have a very forward-looking administration and to have people that we can really place confidence in, such as David Sachs, looking out for us in the crypto and AI space. I think that recently, despite all of the institutional money leaving Bitcoin recently, I see this more as dipping the toes in the market. You're not going to dive headfirst into it if you're these massive players. And I hope that what they have seen is something that they're going to want to see more of in their experiences with the market thus far, and that this is just the start to a transformation of the digital assets landscape and pushing America to be the very first.
Finally, Cooper, let's talk targets, right? So analysts at Bernstein, that's a smart group, right? Their Bitcoin target, they told clients here, closer to 200,000 over the next 12 months. In your opinion, Cooper, reasonable?
In my opinion, the targets speak for the institutional interest as well as the broader consumer interest via ETFs in asset classes such as Bitcoin. So I would hope that with the recent introduction to digital assets that we're seeing a lot of major banks and institutions, getting their feet wet into, that going forward, we're going to be seeing a lot more of that.
Cooper, great to have you on the show today. Thanks so much for your time. Appreciate it.
Likewise. Thank you, Josh.
Coming up, we're taking a look at the state of earnings estimates in our chart of the day. More Ask for a Trend. That's right on the other side. For our chart of the day now, we're digging deeper into earnings season and looking at the health of estimates. Yahoo Finance's Julie Hyman joins me now with a closer look. Julie.
Well, and this has to do with Keith Lerner of Truist, him downgrading stocks to a neutral rating, meaning that basically people should be sort of asset allocated in line with benchmarks right now, not going crazy for stocks, but not selling stocks either. One of the reasons that he talks about is the chart right here, basically that we have seen earnings estimates now kind of go sideways versus what we had been seeing, where they had been gradually moving up and up. And of course, we talked to Keith earlier in the show, and this is what he told us about these earnings estimates.
The next thing that we're looking at is forward earning estimates for the S&P 500. A pillar of this bull market, as we've discussed in the past, has been the earnings have been really resilient. Well, what we've noticed over the last month now, forward earning estimates for the S&P 500 have started to flatline. Again, that's not catastrophic, but it is a shift in that trend.
So you can kind of see here, right, that we had seen them move up, a little lull here, but effectively gradually moving up until the flat line that we're having now. And a lot of the strategists that we've been talking to about their optimism for this year have pointed to the strength, the continued growth in earnings as something that is going to continue to be a driver for stock. So if that's stalling out, it's something that definitely bears watching. All of this, again, has to do with expectations and what is priced into the market. And on that front, Keith also talked about the idea that this year, at this time, that investors are much more positive and optimistic about economic growth than they were this time last year. And in fact, the economic reports have been disappointing. So we'll have to continue to watch the earnings line to see if that comes down a little bit and how the next earnings season does relative to those expectations, Josh.
Thank you, Julie. Appreciate it. Breaking news, shares of Super Microcomputer are spiking higher. That's after hours. The company filing its delayed 10K, meeting that requirement from the Nasdaq to avoid its shares being delisted. Super Micro saying second quarter net sales came in at $5.68 billion. That is shy of the estimate, which was $5.77 billion. Second quarter earnings per share coming in at 51 cents. Now let's take a look at what's trending after hours. First up, Freeport-McMoRan. Those shares are moving higher after President Trump directed the government to consider possible tariffs on copper. The latest move by the White House to tax a wide array of imports and reshape global trade. On a call with reporters, trade advisor Peter Davoren portrayed the move as an effort to stop China's build-out of its copper sector and to address a broader national security vulnerability. Next up, AMC Theaters, the movie exhibitor, announcing fourth quarter earnings, delivering a beat on revenue. The chain also improved profitability compared to the prior year period, while attendance rose 20.2% year over year to 62.4 million guests, which AMC said was a post-pandemic record for the fourth quarter. Food and beverage revenue per patron hit an all-time Q4 high of $7.15. Shares of Caesars Entertainment, they're falling after hours. The company reporting fourth quarter earnings missing same-store net revenue for Q4. That coming in at $2.8 billion. Analysts were looking for $2.82 billion. Las Vegas same-store net revenue also coming in weaker than expected at $1.08 billion. That was a year-over-year decline, 0.7%. That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.